And now with the latest business and market news, it's over to Jayne Edwards.
Thanks, Alan. Friday's trading on Wall Street was fairly tepid, but some strength in the resources sector helped to lift the Dow, while the broader market and the tech sector limped into the black. The confidence about resource stocks was sparked by Friday's stronger than expected Chinese manufacturing figures, which also caused a spike in the oil price to over $81 a barrel and took copper prices to a 2-year high. But data on US manufacturing wasn't so rosy, and investors are increasingly expecting action from the Fed to stimulate the US economy. That caused further weakness in the US dollar, with the Australian dollar closing above 97 US cents. Gold continued to climb, hitting a record for the 6th consecutive session and finishing at $1,318 an ounce. Across the week, most major share markets were broadly unchanged, but Europe lost 2% and Japan also gave away 1%. Now, with news on local shares, here's Tom Elliott.
Well, as you just heard, gold hit yet another record during the week. Now, normally this has a very positive impact on the share prices of gold producers, such as the Goliath of the Australian industry, Newcrest, which recently took over Lihir. However, Newcrest shares didn't go up all that much, and that's because the $A is also very strong against the US dollar. So as a result, the rising gold price cancelled out by the rising Australian dollar. However, another industry sector that does very well out of a rising dollar is, of course, the airline sector. Now, both Qantas and Virgin Blue were up, and there are really three factors at play here. Now, first up, there was a takeover in the US, Southwest Airlines bid for AirTran, and this got people excited about the prospect of corporate activity in Australia. Secondly, the bulk of airlines' costs in Australia, that is aircraft leases and the price of aviation fuel, are denominated in US dollars. As a result, the Australian domiciled airlines do very well when our dollar is strong. And thirdly, and this pertains only to Virgin Blue, its share price didn't go up so much because, of course, it had enormous ticketing worries early in the week. Turning to the Australian Stock Exchange, and it was strong last week. Early this week, the stock fell back. The company did say it is in talks with other exchanges around the world. However, there was nothing imminent to be announced to the market. And again, those hoping for some sort of takeover activity were a bit disappointed. Telstra shareholders also very disappointed, probably not the reaction the company's board wanted when they scheduled a big investor briefing. Yes, the company's maintaining its dividend, but as we keep noticing, it wants to cut more and more jobs, allegedly to improve customer service. Go figure that one. Billabong was up very slightly. It's announced it's buying 38 surf, dive and ski stores around Australia for an undisclosed sum of money. And finally, New Farm shareholders, more disappointment. The company has renegotiated its debt with its bankers, but it's also cancelled its dividend, which is not something the market liked. Winner of the week is Dart Energy, up 22% after announcing a friendly all-scrip merger with Apollo Gas. Loser of the week, however, is Photon Group, down 19% after suffering a substantial shortfall on its recent capital raising.